What is a capital gain? What is a capital asset? What are the different types of capital gains? How are they taxed? Do you have lots and lots of questions? Don't worry, I am here to help you. Hi everyone, I am Bhavna from ClearTax. Today, let's discuss capital gains in detail. So, what is a capital gain? In simple terms, it refers to a gain or a profit obtained from the sale of a capital asset. There is a specific definition for capital asset under the income tax law, and under this definition, all types of property, be it movable or immovable, securities such as listed shares, mutual funds, etc. are included. Also, a transaction giving rise to capital gain is not just sale but also includes an exchange of capital assets, redemption of securities switching between fund schemes, etc. Also, a transaction giving rise to capital gain is not just sale but also includes an exchange of capital assets, redemption of securities, switching between mutual fund schemes, etc. So now, let's look at the definition of a capital asset. Capital assets include all types of assets such as land, building, house property, shares, bonds, debentures, mutual funds, trademarks, leasehold rights, machinery, and jewelry. The specific exclusions from the definition of capital asset include any stock, consumables, or raw material held for the purpose of business or profession, personal goods such as clothes or furniture held for personal use, agricultural land in rural India, gold bonds issued by the Government of India as notified, special bearer bonds, gold deposit bond issued under the gold deposit scheme or deposit certificates issued under the gold monetization scheme 2015. Capital gains arise from a transfer of a capital asset, which includes not just a sale but other types of transfer. So, what is a transfer? Transfer includes a sale where there is payment in money. Transfer also includes the exchange of capital assets or relinquishment of the asset. It also includes a conversion of your asset into stock in trade of your business, maturity of bonds, switching between mutual fund schemes, and redemption of mutual fund investments. So, what are the different types of capital assets? Income tax on capital gains is based on the holding period of a capital asset. The two types of capital assets are: number 1, short-term capital asset. An asset held for a period of 36 months or less is a short-term capital asset. For example, debt mutual funds held for up to 36 months are short-term capital assets. However, in the case of immovable properties such as land, building, and house property, the period is 24 months. Also, in case of unlisted shares, the period is 24 months. In the case of listed equity shares and units of equity-oriented mutual funds, the period is 12 months. Number 2, which is long-term capital asset. An asset that is held for more than 36 months is a long-term capital asset. Assets such as immovable property, jewelry, debt mutual funds fall in this category. The holding period, about 12 months, qualifies for long-term capital assets such as equity or preference shares in a company listed on a recognized stock exchange in India, securities such as debentures, bonds, government securities, etc., listed on a recognized stock exchange in India, units of UTI, whether quoted or not, units of equity-oriented mutual fund, whether quoted or not, zero coupon bonds, whether quoted or not. So, how are capital gains taxed? In the case of short-term capital gains from listed equity shares and mutual funds, the tax rate is 15% plus educational cess and applicable surcharge. Let's consider an example. Mr. Z sold 200 shares of a listed company for Rs 250 per share on 25th February 2020. The shares were originally purchased on 23rd March 2019 for Rs 150 per share. So, here he has held the shares for a period of less than 1 year. Hence, the gain will be taxed as a short-term capital gain. So, here's how we will calculate the short-term capital gains. Here, the sale consideration is 50,000, which is Rs 250 into 200 shares. We then reduce the cost of acquisition, which is 30,000. Here, the cost of acquisition is Rs 150 into 200 shares. So here, the short-term capital gains stands at 20,000. The tax in case of listed short-term capital gains is 15% of the entire capital gain. So here, the capital gains tax works out at 3,000, that is 15% of 20,000. Next, we will take up long-term capital gains from listed equity shares and mutual funds. The tax rate will be 10% plus education cess and applicable surcharge. Here, you will not get the benefit of indexation. The tax will be calculated on the entire gains without indexing the purchase cost. Let's consider an example. Mr. X sold 400 shares of a listed company at Rs 300 a share on 19th March 2020. The date of purchase was 10th January 2019 for Rs 200 a share. So here he has held the shares for more than 1 year. So the listed shares which are held for more than 1 year become long-term gains. So here's how we calculate the long-term capital gains. Here, the sale consideration is 1,20,000, which is Rs 300 into 400 shares. We then reduce the cost of acquisition, which is 80,000. Here, the cost of acquisition is Rs 200 into 400 shares. So here, the long-term capital gains stands at Rs 40,000. Please note, there is a threshold exemption of Rs 1 lakh for long-term capital gains obtained from the sale of a listed equity. In case your long-term capital gains for a financial year are up to 1 lakh, you do not have to pay any capital gains tax. However, in case your long-term capital gains exceed 1 lakh, by whatever amount the gains exceed 1 lakh, you will need to pay the tax. Please note, in case you have sold multiple shares or units of a mutual fund, you need to put in script-wise details while filing your ITR. The process is cumbersome and tedious. ClearTax's tax filing software helps you to upload all your script-wise data directly from the stock statements provided by all major agencies such as Zerodha, KEMS and Karvi. From the assessment year 2020-21 financial year 2019-20, you need to report script-wise details of long-term capital gains earned from sale of listed securities and mutual funds during financial year 19-20 under Schedule 112A. This schedule requires information such as ISIN, name, number, sale price, purchase price, etc. for every single scrip or mutual fund sold. By using the ClearTax's online tax filing software, all the relevant details in Schedule 112A can be auto-populated at a click of a button. Customers can also calculate their capital gains within a few minutes. For other long-term capital gains such as sale of house property, debt mutual funds, unlisted investments, the tax rate is 20% plus education cess and applicable surcharge. Here, you calculate the capital gains after indexing the cost. Let's consider an example. Mr. X sold a house property for 80 lakh on 10th September 2020. He incurred expenses on transfer of Rs 2 lakh. The property was brought on 24 December 2002 for Rs 24 lakh. The capital gains calculation will be as follows. Here, the sale consideration is 80 lakh. We then reduce the expense of transfer, that is 2 lakh, from the sale consideration. So 80 lakh minus 2 lakh gives us 78 lakh, which is the net consideration. Then we reduce the indexed cost of acquisition. Since the asset is long term and we have held it for more than 2 years, now when we index, we take the cost, that is 24 lakh, and multiply it into 301, which is the cost inflation index for financial year 2021, the year in which the property was sold, and divided by 105, the cost inflation index for financial year 2002-2003, the year of purchase. So we now arrive at 68 lakh 80,000. After reducing both the costs and expenses, we arrive at a long-term capital gain of 9,20,000. For the resulting long-term capital gain, you can claim capital gains exemption by investing in another residential house or in long-term bonds. So next time you have income from capital gains, in case you have listed securities where you need to gain a lot of details, wait no further and reach out to ClearTax's e-filing platform. Our tax filing software will not only help you in auto-population of data, but it will also help you in uploading your details directly from major agencies such as Zerodha, Kames and Karvi. I hope this video helped you in understanding the basics of capital gains. For more information, please visit our detailed page on capital gains. You can find the link to this page in the description box below. If you like this video, please do like, share and comment, and do subscribe to our channel, and do not forget to hit the bell icon so that you get a notification every time we upload a new video. Stay tuned for more videos.